Stock market. We're gonna look at 7 stocks this week and which one has the most potential. After watching this video until the end, you're gonna know how to look at individual stocks. Welcome to World Traveling Stock Investor and Option Trader channel. Where are you watching from? Comment down below. Last week I made over 10,000 within 5 trading days. So you might be thinking, oh, this is so easy, so simple. Then you are wrong. Remember, the reason why stock investing and option trading is much better than normal individual average job is because there is no limit, right? If you go to a job $10 an hour, then you can only make $100 if you work for 10 hours, but there's only so much time, 24 hours in a day, and you can't be working all the time. So there's no limit. So if people ask me, hey, how much can I make with $1,000 to $2,000, or maybe how much can I make an hour? There's no right or wrong answer. There's no answer really, because I'm going to show you on Monday, August 10th, I made only $161. So some people who might be making $200 a day, they might be saying, oh, you only made $161, so this is not a good business. Then they might be wrong, because the next day, look at this, 110, 11,000. Why? Within 2 days, the difference is so much, because I made over 11,000 just within 1 day, just like this. No other business in the world can you make like this with 1 or 2 hours, 3 hours of my time, anytime. During the stock market open, I could make this money. So of course, there's basically some losses along the way. Wednesday, yeah, I lost 1,200, not a big deal. And you see, Thursday, look at this. Hey, only $300. So nothing life changing, right? Within 1 day, no life changing. But if you accumulate everyday gains, that could be life changing. Hey, only $200. But overall, 5 days, I made over 10,000. Right? Just a few hours a day and traveling around the world. Yeah, that's pretty good. So remember, in order to get consistent profit, what's more important? In my professional opinion, I believe, make more consistent gain, then your win rate has to be higher than your loss rate, and also your win gain has to be more than your loss, the amount. So if you fulfill these 2 criteria, then it's much simpler to make consistent profit. Let's look at S&P 500. S&P 500 the past 5 days is barely up 0.44%, and year to date, 13.52%. Beating the real estate market. If you buy a house, if you make $10 a year, you're making very well. It's consistent, very good. But in stock market, 10% is just average, right? Just average. 13.52 is only 8 months, not even a year. Much better than real estate. But what we are really interested in, what I'm interested in particularly is the S&P 500 over the past 5 years. If it gains 75.29%, I'm really most interested in stocks that beat S&P 500 over the past 5 years. So remember, this 75.29% is a magic number. So we're going to look at 7 stocks in a few minutes. Then after that, we're going to see which one beat S&P 500. Next one, Nasdaq 0.18% up. Year to date, beat S&P 500 15.04%. That's pretty good. 5 years, it's 81.65%, better than S&P 500 because this is technology. If it goes up more than S&P 500. If it goes down much more than S&P 500. But for the purpose of stock analysis, my 5 criteria, I'm going to be using S&P 500 as a benchmark. And next one, Dow Jones, down 0.63%. Year to date, up 11.06%. And 5 year, 53%. So I like to consider only S&P 500. Okay, Dow Jones is good to know, but it's not gonna be like, oh, I need to look at Dow Jones. What happened last week? Last week, core PPI, CPI, they came in line or better than expected. So that's why stock market was happy, because Federal Reserve most likely not gonna raise interest rate because inflation were coming down, right? Because due to the data, but retail sales was down. Retail sales was down there, much more than the forecast. So that means that retail store probably may not perform well, but depending on the individual stock, of course. So we're gonna look at stock number 7, SMCI. SMCI up, so 25%. Why? AI stocks are coming back now. Corey up 14.23% the past 5 days up. And this one, Cisco came down 9.28%, 9.28% because even though they beat their estimates and their guidance came in a little bit more conservative. So during this AI deep boom period, investors were expecting much higher. So that's very normal, nothing to be concerned. But personally, if I don't like the business or understand business, I'm not gonna invest in the business. That's one of my criteria. Next one, CBRS, yeah, didn't move so much. It jumped after it came back down. It just became a public company very recently, so I'm not gonna be investing in a company that just became a public company. Next one, AMD went down. They beat estimate, but expectation were so high. So even though they did pretty well, my investors were expected so high, so that stock went down. It's just like you are an A student, right? A student, everyone expects you to get A plus or something better than A plus, right? Or they want you to be more than perfect in every area of your life. So if people expect you too high, even if you get slip up, let's say you may get it A, then after that you get 1 A minus, then stock drop. The same way if you have been getting C, E, A, but if you get 1 B or 1 A minus, people always say you are good job, very good job. The stock goes up. So that's why those companies with low expectation, their stock price can gap up. The company with high expectation, even though the company with high expectation are better companies than low expectation company, their stock price can come down, just like that. So this time, this week, what's gonna be happening? We're gonna have some housing data coming up, and also we're gonna have FOMC minutes published as well, and we're gonna have manufacturing PMI, services PMI come out on Friday as well, right? So we're gonna look at stock number 7. It's Home Depot. Home Depot is year to date down 2.01%. They give a dividend 2.75%. Over the past 5 years, it doesn't beat S&P 500. So I'm not really interested in Home Depot. Home Depot is down because the housing market is not that as good as the COVID time, 2020 and 2021. So lots of people, they don't want to spend money on buying houses or renovating houses at this time. So that's why stock is not performing pretty well. So it doesn't beat S&P 500, so I'm not interested in buying it. But if it drops much lower, I may be interested in buying. Oh, Lowe's is down 11.51%. 1 year, 12.92%. Home Depot 1 year, 14.1%. Home Depot is down much more. 5 year, look at this. 5 year is 4.93%. Lowe's performed better than Home Depot over the past 5 years. And Lowe's is a smaller company than Home Depot. So this probably can go up higher because it's just a smaller company. If it's a better company, this will most likely gonna go up higher. But personally, I'm not too interested in buying Home Depot or Lowe's yet, especially when they don't beat S&P 500. I'd rather buy S&P 500, right? That's stock number 5. Baidu is a Chinese company and like Google of China. Baidu down 31.02%. 1 year it barely up 15.02%. 5 year it doesn't be S&P 500, right? It doesn't be S&P 500. So during the past 5 years, if you look at it, these are like support level. Oh, look at this one. This one jumped during the pandemic. It jumped COVID. It went down 99. Hey, so this time $100 is like support level. Hey, not so bad, right? If you are interested in basically trading, if I'm interested in trading, 100 may not be a bad level, and maybe if it gets down to 97 or 83, it would be even better because this is gonna be a strong support layer, strong support area. See, 180 and 90, yeah, pretty good. Here another one, 90 in 2013. So if after any support, if it drops to 90, I'm interested in basically for trading. This is a financial advice, okay? I'm just telling you what I think. My education, I'm just sharing my education. 35.28 billion, yeah? Look at this. Next one, target. Target is year to be up 53.7%. That's really crazy. Target went down to really low to 85. Then after that, it just went straight up. Sometimes, if the stock has been depressed for a long time, target was struggling with inventory at the time. I believe they already resolved that issue, so that's why stop bounce target. So this could be something that I could trade, right? Because it keeps going up, probably it will keep going up. It doesn't beat S&P 500, so I'm not going to buy for investment. But they pay dividend 3%, not bad. So it doesn't beat S&P 500, but it just bounced back pretty hard, pretty bad, pretty violently. You see? So yeah, Baidu and target probably in my trading list. Lowe's and Home Depot, probably I would just keep them in a watch list for investment later. If it drops so much, they get discounted just for the dividend, I may just invest in them. And next one, Alibaba year to down 20.5%. Look at this, 20.5%. And 5 year, what happened? 5 year is 21.62%. It doesn't beat S&P 500, so I'm not going to buy. Alibaba, $70 is a pretty good support. So compared to Baidu and Alibaba, I would probably be interested in trading Baidu much more than Alibaba. Okay. So, but if you were Jack Ma, the owner of Alibaba, you are already a billionaire, right? But for individual investor, retail investor like you and me, we need to be very particular about investing our money in places. So if it doesn't beat S&P 500, I'm not interested in investing. So no, I'm just gonna skip Alibaba. Next one, stock number 2. Walmart up year to 2.23%. 1 year 14.47%. 5 year, it beats S&P 500. Look at this, 128.35. So this is a stock that could potentially be on my investment list, because criteria number 1, it has to be S&P 500. Yes. Criteria number 2, the business has to be at least in operations for 10 years, at least 10 years. So Walmart has been around since 1962. Look at this, right? Then after that, number 3, it has to be a public company for at least 5 years. Walmart, yeah, it has been a public company for a long time. So yeah, it did pass my criteria. Criteria number 4, develop this business. I'm okay. I prefer not to invest in retail, but as a Walmart, like that's everywhere in the US, I may be interested if it gets really undervalued. So this may just be on my investment watch list, just like Home Depot, Lowe's. So not gonna be investing yet. I usually tend to invest probably at the last for the retails. Stock number 1, DRL Corporation. Year to date up 30.40%. Impressive. 1 year, let's look at 1 year. 1 year it's 23.97%. So I think most of the gain come from year to date. And 1 year is only 22.97. And 5 years, it's almost S&P 500, but it doesn't beat S&P 500. S&P 500 is 75.29%. So this one is, look at this, 73.25. So it doesn't beat S&P 500, but it has been around for a long time, 1837. Business has been around for a long time. So I'm just gonna add this in for my investment watch list. So which one has the most potential? I mean, in terms of momentum, I think Target has the most momentum because of you see going up trend. And in terms of possibly at the support level and then bounce back, I would go with Baidu. It could possibly bounce back after earnings, or it could drop to $80, $90. So Baidu probably has the most potential for bounce back. If you want to learn more, go to Master Restore Option Crypto, and you can check out my other playlist as well. If you want to know what I buy, what I trade, stock option, go to this Master Restore Option. The Patreon link, the link will be in the description comment down below.